Joining me now, we've got Dan McDermott, partner and senior analyst at chartguys.com. He's calling us from Asheville, North Carolina. Okay, so nice to see you again, and thanks. And you and I are both chart guys. I won't say I'm a chart guy like you are. I sort of find myself lacking discipline. But so we were talking about the S&P, and you might want to just repeat what you were telling me just before we started recording here. The evidence of proof right now is on the bears to prove you're wrong, right?
Absolutely. We had a range that we were watching after the August dump, and we bounced around within that range for a solid month. And every time we were close to resistance, a bearish article about China comes out. Every time we're close to support, a bullish article comes out. And we finally got the bull break last week. So I'm in a state of mind where the burden of proof is on the bears. You got to show me something. You got to see a lot of bear volume. You got to see breaks of support. And if that doesn't happen, we're looking up at the all-time high. Yeah.
No, I've learned the hard way that markets climb a wall of worry, and sometimes you shouldn't short a dull market. Dull markets usually, it can work both ways, of course. And now gold. Now what I like about gold is if you look at a 10-year chart, and you see that base we had about a 5-year base from about maybe 2013 to recently, where it was trading in a range, and it broke that range decisively. It looks to me like the gold chart is one of the best looking charts out there.
Yeah, absolutely. And what we do as traders is we can see setups that are tightening ranges. And when ranges are tightening, we pump the brakes and we slow down our aggressiveness. And it's the breaks of those tightening ranges where we get aggressive. And obviously, everybody in the gold world got really aggressive on that break, and silver followed along as a little bit of laggard, but the miners were on fire. And we're just going to be looking for some weekly consolidation, which is already underway, and anticipating that gold and silver will give us some weekly higher lows and remain healthy on the longer term time frame.
Now, now maybe this is a bad question to ask you, but would you say that like gold was briefly? I've always looked at the first contract month. That's sort of the one I go to, because I think maybe sometimes the tail wags the dog. Now, do you see the 1500 level as being a level that could be important, or do you think we could go to 14? It wouldn't really matter, would it? If it went to 1470 or 80, we're still entrenched in a very bullish trend.
Yeah, exactly. 1500 mattered on the short-term timeframes, because once we broke that 1500 level, it was, the bull miners really reacted to that in the short term. But as you said, on the weekly time frame, as long as we're over 1400, we're looking for a weekly higher low. So anything in the upper 1400s will keep that weekly uptrend intact.
Right. Well, it's fascinating, and we look at the marijuana space, which I'm not going to suggest there's any correlation between bullion and the marijuana sector. I sort of look at the marijuana sector as a sort of a bubble, if you will. The money that was made, a year and a half, 2 years ago was fast and furious. I look at Tilray today. It had a great move. I was trying to buy it just before the move happened, and I kept getting stopped out, so it wasn't working. But I was on the right track. I just didn't have. I just couldn't go back to the well. So when you see it, when Tilray goes from like almost 25 to 32, 33, is that about as good as you can expect after what we've seen?
That's a start. That's for us to start paying attention to the longer term timeframes. And if they're able to follow through with that, what I need to see is trend changes, which is higher lows and higher highs on the daily time frame. So we had that big solid 4-day bull move, and now we're pulling back and looking for that daily higher low. And I'm just looking out of the corner of my eye. It's up 4% today. So we're watching to see, are these daily higher lows in the major Canadian MJ names like CGC, like APHA, are they forming today? And what we have to see is by the end of this week, we have to break the highs of last week, because that will show us continuation. And that's something that's been lacking the last 4 months in this sector. Yeah,
I noticed. I watched a lot of your interviews that you and James have, and you're consistent on that. You want to see a recent high broken and to the upside, like if it's a bull move to the upside, and that's a validation of a trend change, correct?
Yeah, and it's just keeping pressure on shorts. If we bounce and then we just fade and give it all back, then shorts remain comfortable. We have to put pressure on shorts, and that shows sustained buying pressure if the higher low and higher high gets that follow through.
Now, just a question. I've been around, like I'm of a different vintage. I've been sort of following this stuff for 40 plus years. Would you say there's a lot more sophistication now in terms of, I mean, I'd like to believe there's a lot more people today willing to play both sides than say 20, 30, 40 years ago. And maybe I'm mistaken, but like there's a major buying force and there's a major selling force, and they're there all the time, aren't they? Like, and whoever wins, that's where you got to go, right? You got to follow that change.
Yeah, I would say the age of the internet and technology lets us know, hey, we can learn how to do this stuff. And back in the day where we didn't have that information at our fingertips, it was an intimidating world to be in. And the suits and ties, really, we had to go to them to learn how to do this. But now that you've got Google and YouTube and all these sources, it's definitely a much broader reach of people that are dabbling in trading and investing.
Yeah, the internet in a lot of ways has leveled the playing field, and will continue to do so in probably ways we can't even comprehend yet. You know,
yeah,
it's mind-boggling that, you know, I have a friend who's a real man for all seasons, and he loves to go to the library, but he says I don't need to go to the library anymore. And he's a practicing physician. He said if I need to find something out, I can find that out right away, right on my phone. It is mind-boggling, isn't it?
Yeah, it's a bunch of freedom. I mean, you can learn how to do things that otherwise would require a mentor or some hands-on experience. And that was me and trading. I was able to learn a lot in just forums and using the internet that I otherwise would have had no exposure to.
Sure. So what have you got for us today, Dan? Have you got some things we should look at?
Yeah, today's a big day for the U.S. marijuana space just because of MMEN. MMEN had a window that we were waiting to hear back from the Department of Justice about their transaction. They've got a deal that's been pending, and the 30-day window expired. So that's essentially, if the DOJ was going to say, hey, we need more information, this deal can't go through yet, they would have said it already. So with that expiration of the window, we see names like Origin House, OH. They have a deal pending to be bought by CL, Cresco Labs, and they're seeing a big bull move today because the odds of their deal going through is now much higher, that MMEN is making this step forward. So it's a bullish day in that regard, that the Department of Justice is not continuing to hinder these deals going through, and that is allowing for some of the discount. Like OH right now is trading at a discount compared to the deal that is pending with CL, and that discount is shrinking a bit because the odds of the deal going through are increasing a bit.
Okay. Now I've been looking at weed quite a bit. You know, it's had an unbelievable correction, but since two weeks ago, it started moving off that $30.50 level in Canadian dollars. I think it got to 37 and change, about a 7-point move. It looks like it's forming a pretty good bullish channel here that I kind of think it may go higher, but again, you have to sort of wait for confirmations, etc.
Yeah, well, we had what I call seller exhaustion. So we had the bearish reaction to earnings, and then that followed through for a solid week plus. So essentially, it's people selling and shorts going short on the actual earnings, and then you have all the articles that come out in the following week. And then you get to a point where everybody that's going to sell has already sold, and anybody that's going to go bearish has already gone bearish. And that's when the scales tilt. And that's when you get this 20% bounce. So today is going very well as far as what the bulls needed to see happen. We topped out on the initial bounce on Friday. We pulled back yesterday. We pulled back this morning. And then the bulls started buying that dip. So again, as I said previously, if we can break the high of last week by the end of this week, that's going to show me a momentum shift that we have not seen in Canopy in the past 4 or 5 months.
And just out of curiosity, I always like to see a closing high as opposed to a daily high. Like for instance, if we have a high and then it closes below the level that you would like to see breached, I don't put the same weight on that. I guess most technicians do the same.
Yeah, that makes a lot of sense, and it just shows confidence. If bulls are willing to hold their positions overnight, that means they're looking for more follow through, and it's just a vote of confidence.
Yeah. Now, do you look at interest rates?
I keep an eye on them, but honestly, everything that I want to know is in the price. The only thing real to me in any of the markets is the price right now. That's the only thing I care about. And as long as we're seeing higher lows on the weekly time frame of the broader markets, I just ignore all these fundamental fear articles.
Yeah,
if we're going to see weakness and fear, it'll be very evident in the price.
Yeah, I guess I was maybe I should have been a little clearer, but I'm thinking about like which way you think interest rates are going from a technical perspective. Like for instance, you know, we last week I think we got very close to the all-time 10-year low in U.S. bond yield, and I think that was a 130 odd. That was I think that was July of 2016, and I think last week we got down to close to 142, 143. Again, you know, we may look at this in a week or two or three, or sorry, maybe a month, 2 or 3 or 6 months, and say maybe we got a double bottom over a 3-year period or something like that. But yeah, you know, again, you don't know until it happens, right?
Right, and that's why I say technical analysis is more reactive for me and how I use it. I'm reacting to it. I'm not predicting. So if I see certain levels break and I see trend changes, that's what I'm reacting to. So with the yield here, we're definitely seeing a bounce, and I'm going to be watching the longer term time frames to see if can we change weekly trends, because right now we're just looking for a weekly lower high to be set on this bounce.
Do you put a lot of credence in what relative strength indicators tell you? Like obviously, I mean, when you see something that's under a 20, and it's got lots of volume, and you can't understand, like these things work, don't they? I mean, you don't want to be going long something that's got an RSI of 85, like
exactly.
Yeah.
So I use my main indicators are obviously the price levels, volume, and RSI. If I had to eliminate everything else, that's what I use. And I use a rule of thumb. My rule of thumb is I'm not going to go long on things that are over 70 RSI on a longer term time frame, and I'm not going to go short things that are under 30. And that's just a consistent rule that I have, because if I want to do this for decades, if I'm doing those things, it's going to work sometimes, but you know, law of averages, I'm probably going to lose more than I win. So that's just a standard rule of thumb that I have. And it's also important to look back at the history of the individual asset or stock or whatever it is, because some stocks can have their RSI drop to 20 on the daily often, and other ones very rarely will get there. So history is important as well.
Okay, so Dan, maybe you got a couple charts we can take a look at.
Absolutely. So we'll just take a look here at some of the charts that we were just talking about. First, gold. So gold has lost the daily uptrend. Our last little higher low was at about $1,516, so $1,516. That level broke, and the bears have seen a decent amount of follow through. So when we lose a clear daily uptrend, what I do is zoom out and look at the longer term time frame. So the weekly chart, the last little consolidation that we saw bounced off 1400. So as long as the bulls hold that level, they're going to be just fine for that higher low. So anything in the upper $1,400 range keeps this uptrend intact, and we were certainly overextended with the initial follow through that we saw going up a solid $200. So what we're going to be watching for from here is, can the bulls set their weekly higher low and make their way back up towards the recent high of 1556. So what I'm looking at is, can the bulls continue the uptrend? Or a red flag would be if we find our weekly high or low, we bounce and fail to break the high and then drop down, and that would change the trend and then put the bears in control of the longer term time frame. The S&P 500 strength that we talked about is certainly not helping the gold bulls, as there is a bit of a sigh of relief last week when the S&P 500 broke bullish, and that's pretty much what led to the precious metals breaking their daily time frames bearish. So what we're looking at for CGC, this is pretty much the ideal consolidation, and right as I'm saying this, we're hitting a new high of the day. So we topped out on Friday, or actually yesterday. We're pulling back, and we're looking for a higher low to form. And if the bulls are able to turn around and break resistance of 28.41, which is the highest price that we've seen on this bounce, again, that's going to put continued pressure on shorts. Anybody that entered bearish yesterday or today is going to be underwater, and that'll show us that the bulls have some sustained buying pressure. So right now, if we can hold 26.36 and break 28.41, that will be a good sign of confidence for these bulls. I'm actually more bullish APHA, and APHA has my attention. I've been bearish on APHA for probably the majority of the time I've been covering the marijuana sector, and that is because comparative to its peers, speaking about Kronos and Aurora and Canopy, it has been weaker. So I have been bearish, but this weekly time frame is much further along with trying to change its trend than the other major names. And that's because of the bullish reaction to earnings. We had the bullish reaction to earnings. We pulled back from the profit taking. We established a new support level. And now if the bulls can break 760, which was the high of that reaction, that's going to give us a weekly trend change. And it'll be the first name in the marijuana sector out of the major players in Canada that changes its weekly trend. And that would be notable because we've pretty much been in a clear weekly downtrend for a very long time. So I have my attention on APHA, and now let's look over the charts that I was talking about, the deal with MMEN. So you look at MMEN today, and it's only up about 1 to 2%. And you might be saying, well, if the bullish news was for the MMEN deal passing its time window and the DOJ not responding, which is a step forward, why is MMEN only up 1 to 2%, and why is OH up 7 or 8%? OH is having a big breakout day. We confirmed a daily bull flag, and pretty much this is the move that all Canadian MJ names want to see happen on their charts. Healthy, brief consolidation into continuation. And again, just looking back quickly at CGC, the CGC chart is hoping that that's what the rest of the week looks like. Brief consolidation into continuation. But the reason that OH is having such a more bullish day than MMEN is because of the way that the deals are working right now. So MMEN was buying another company, and there is no way to collect on that discount. There's a discount between companies because we're not positive that these deals are going to go through. So OH, even this morning, was trading at a 20% discount as to what their shares will be worth comparative to the price of CL when CL buys OH and the share conversion takes place. So that 20% is because the market has been unsure of whether or not the deal is going to go through. So as soon as we get that MMEN news, hey, the DOJ didn't ask for more information and they're backing off a little bit, that increases the odds that the deal is going to go through between OH and CL, and that means that discount is going to get bought up by traders and investors, because if the deal were announced tomorrow, that's going to be an instant 10 to 15% payday for that discount getting gobbled up. So OH has my attention in the USMJ sector because it's one of the stronger names, technically speaking. We already had a little weekly higher low and higher high, and we're going to be watching for how much follow through can these bulls put together as one of the technical USMJ leaders.
Dan, that's a great interview. Really appreciate the opportunity to come on and talk to you, and hopefully I'll have that opportunity again in the next short while. Anyway, thank you very much, and hope to talk to you soon.
Thanks a lot, Ed. Good to see you.
Okay, thanks, Dan. Thank you very much.